Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 25th of September, 2018, just after 4 p.m. Central Daylight Time. You know what tomorrow is? FOMC, Federal Open Market Committee. So we're going to get their statement because it's a two-day meeting that culminates tomorrow. And then, I'm guessing 1:30 p.m. Central Daylight Time, we get the press conference. Obviously, the market's going to look to see the dot-coms. What is the Fed going to do? What are they laying out? It looks to me as though the market is built in 2 rate hikes for the rest of this year, one tomorrow, another one December. The surprises to the market would be that the Fed goes up a half a basis point, not a quarter point, or it does nothing. Low probabilities, but those would be the two possibilities that they come out with. If you're looking at economic data, consumer confidence, it's over the top. President spoke today at the United Nations. He got laughs at the beginning, but he carried through on what he's saying. It's America first. And as long as he's president, those are the policies staying in place. I think, as I've said to you, in the financial markets, you got to watch the midterms. That'll give you an idea China's next move. Right now, they get a free bite of the apple, as I see it, by just sitting pat, doing absolutely nothing, seeing how Congress sets itself up in the midterms. Oh, I hit that by accident, but I want to remind you, I've got my webinar tomorrow, Thursday. Tomorrow's Wednesday. Thursday at 1 p.m. Central Daylight Time. If you did not get your invite, I sent 2 of them this morning. It's either in your junk mail, your clutter, or you're not on my mailing list if you can't find it in any of that. Call our staff at 866-973-2077 to talk to them to get you one of those mailed out. All right, let's go to the S&P. As you can see, we finished today down 1270 for the week, 1270 lower at 2921.30. We're off the highs of 2934, but it's a pullback. You can't say anything more than that about it so far. The interesting thing that happened on the way to work, if you look at the break here at 2932 and you look at the next day's high, which was yesterday at 29.30 1/4, all you did today is you reached up, filled that gap, and sold off again. If the market gets under 29.1775, the pattern on the chart, regardless of what the Fed says, would be initially one of lower highs and lower lows. The market is over the 18-day average. It might set up a challenge of that at the 29.06 area. If the market's going to stay bullish in this pattern of higher lows, higher highs, it should not take out 29.17. If it does, you lose that pattern. There's nothing that can change that. The resistance of the market is what it continues to show. You get up, you go to a new high in the market, you hit the upper Bollinger Bands, and you keep pulling back. And this has been a pretty consistent theme all the way through. It's one to think about, okay? And that's what this market has been doing, making you think. There's so many people going to cash, and I keep hearing that, and I hear the alternatives because you did today get up to, what, 3.11 and a fraction in the 10-year notes, and the 2-year money instruments are also paying pretty good. The problem is, how do you beat 9% on some of the gains that these indices have been showing? And that's always the problem. If you've come out over the past 9.5 years of the stock market, the question has been, how do you get back in? Maybe you do rotations, I don't know. Futures traders don't have to worry about that. Because of the high leverage in futures, you're always worried about the next hour of trading. As you look at, though, at the market, as I said, if you took that out, be careful. Momentum is correcting an overbought condition. Anytime the numbers are over 70, they're overbought. They can get what we call embedded, but we don't have that going right now. When we look at the NASDAQ, today's action was pretty good because you've got the market now in a higher high, higher low. So we're getting, again, the move back into some of the techs, Do remember that the NASDAQ has been impacted because of these new sub-indexes that they've been creating as we get a communications index, then we get the chip sector in another area. But you'd have to take out 74, 73, 75 to break the pattern of higher lows, higher highs. Support initially 75, 61. You figure out how you're going to trade the FOMC. That's up to you. In the Dow, when we reopen tonight, be cautious. You lost the embedded reading right on the close. Often, I wish I could use the word always, but it's inaccurate. Often, when you lose the embedded reading, if you don't get it back right away, price and the 18-day average make a run at each other. We'll see if that's the case. In the Russell, we have a pattern of lower highs, lower lows. I double-checked this to be sure. That's the 1733 level. So resistance up at the 1723.60 zone. You'd have to take out 1731.30 to negate the downtrend. But even then, because you have the lower and low, you can't get a bullish signal. Not if you're defining bullish as higher highs, higher lows as a trend, being then over the 18-day average and turning momentum up. In the VIX, we'll see if the market can finish off this run and get to the 18-day average after it lost number one, or trying to get a correction going where the market got oversold is really the word I'm looking for. As you know, I think that the pros went short, puts right here, and you got so close to the 18-day average, they may have already taken their money off the table. In the bond market, you've got to ask yourself going into the FOMC on this move, is it already discounted? Can't answer that. I wish I had the crystal ball. What I can tell you is you've got the clear pattern of lower highs, lower lows with the embedded reading. I have no way to know in a major report like an FOMC statement and a press conference where at any point the Fed chair can say something you're not ready for, what that market would do. Same in the 10-year notes. I've been bearish. It's been the right thing to be, but with a report coming out, you decide what you're going to do. In TLT, the same thing. Lower highs, lower lows, the embedded reading, the bias down. The question is, if you go through the report, what else are you looking for? That becomes the issue. Some of these current FOMC meetings, if you're looking at them, Fed does the interest rate hike, and then you get a reversal in the market right away in the futures, back to the upside. So I'm going to let you figure that one out. I have my own philosophy about major reports. In the dollar index, once we got to the lower Bollinger Band, you bounced back up to the green line, which is the 100-day average. The market, if we look at the momentum here, both numbers are over under 20 today. They're both under 20 yesterday and the day before. So the momentum has converted itself from being oversold to what we call embedding. Now, if you lose the embedding, often price and the 18-day average make a run at each other. We'll see if that's going to be the case. Until it's lost, guess what, folks? It ain't lost. Again, how do you handle the FOMC tomorrow? The flip of the dollar is the euro. It got to the upper Bollinger Band, and it has slipped back to the 100-day average. Unlike the dollar, it's just an overbought market, not embedded. Caught right here. We'll see which way it breaks out. British pound, as you know, all of what's going on in Brexit, wild. If you keep up with the Tories and the Labour Party, what's going on, and Miss May, the Prime Minister, she's got her hands full. I don't know how this thing resolves itself. It doesn't have a pattern that I see that is a good one. You got a higher high, lower and low. I say the bias is up because you're over the 18-day average. The combination of the 100-day average in green and the Bollinger Band acted as a good resistance in the market. In the end, momentum down, trend down, bias down, embedded reading, and you're just riding this lower Bollinger Band as the world has a risk-on mentality at work, and therefore it doesn't want to own the end just yet. Now, Mr. Abe and President Trump, the question is, can they reach a deal on Japanese trade while he's in town? In Bitcoin, I'm watching the October. I was on TikTok today for Bloomberg talking about this. What I see is a market without a trend. You got a lower and low, higher high. The resistance is still the 18-day average. The market hasn't been able to get down to the lower Bollinger Bands just yet. We're seeing a lot more use of blockchain, and I'm seeing it everywhere. I'm seeing now even grain companies want to hold trail. You know why? Salmonella. If they can trace where something came from with the blockchain technology, they can get ahead of problems if they show up. Very interesting. I read a story about that yesterday. Now we're seeing some companies, large ones in Japan, also starting to use Bitcoin on their campuses. Now let me define campus. You get these monster financial companies, and what they'll do is they'll test things with their own employees to see if they can get use. That's the element that's been missing here, one of the elements. Use for the Bitcoin, use for the cryptos. Brent WTI, market fell, obviously up. The president again verbalizing that OPEC has to now pay their own way for defense. We're not going to, according to the president today, defend them, throw our monies as they take and just keep getting oil prices higher. But you can see, what's today's date? The 25th. What day do the Iranian sanctions go in? They go in the first week, I believe, of November. You've seen India back out now of buying Iranian oil. There's a number of countries that are backing out because of U.S. sanctions. And you can see in the November Brent how the market has priced in this loss of Iranian crude. It is ahead of itself. Why? Markets only stay 5% of the time above or below Bollinger Bands. That's the concept of the algorithm. And if you take a look, you've got the pattern of higher highs, higher lows. You are overbought. You've hit upside targets. In the WTI crude, you're riding the upper Bollinger Band. You get a few days over, then back under, overbought. Still very much in an uptrend. Gasoline still in an uptrend ahead of itself. When I say ahead, it means it's over the upper Bollinger Band more than one day, okay? And you can see that that's been two of them in a row. And natural gas. This market's caught the shorts. If you go back a few days ago, I said that I thought that when the market cleared this at this time of the year, when it cleared this high here at the 285.90, I guess that is, that the shorts got, if you will, caught in that. I didn't think this was happening. If I knew that, I'd be the richest man in the world. But away you go to the upside, and what I think that is a combination of a lot of events. You know, people are talking China's not going to buy our natural gas. You hear all these reasons. We're still producing too much. Look at how this market's gone. It went from 274, and you're up 30 cents. You're up to 305.80. There's a point when you're wrong on a chart, and you decide that's it. I want to remind you about my research because it comes to you in a number of ways. One of my favorite ways is our mobile phone. We show you that you can get it on tablets, PCs, whatever. But as I put out my videos like you're watching right now, they'll pop right on your mobile phone. Just hit it. It's going to play instantly for you. You don't even have to be signed into our application. I think you'll like that. Then when I put out my written updates, you get more information on that. My morning videos where I'm able to prepare you for the day's trade. And again, I'm going to have that webinar this Thursday. Remember, you can get all my information. All you need to do, if you haven't tried it yet, is give us a call at 866-973-2077. You can also go to our website at www.iraepstein.com or click up here. It'll take you right there. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.